Let's talk about immigration. And obviously, in our province of Nova Scotia, immigration is a key component to growing the economy. We know that birth rates are traditionally down, and we've got an aging demographic. So this is critically important. How much work do you do with new Canadians?
We certainly do a lot of work with new Canadians. I would say, one of the primary reasons that we do a lot of work with them is, people at the branch might not be skilled on the new to Canada programs and what's available, for new Canadians. And, when we're talking about someone who is a new resident here in Nova Scotia, we ask them really what is their residency status of Canada. And it's really important to ask that because there's different programs available for different types of new to Canada residents. So for example, if a borrower is a permanent resident, they can qualify for the same programs that a Canadian can qualify for. So I think that's really important to know. So permanent residents can buy a home in Nova Scotia across the country with as little as 5% down. And they can still access, government programs like first-time home buyer incentive and, home buyers plan and all of those great things. And, obviously mortgage insurance from the Canadian Mortgage and Housing Corporation and the two private insurers. Temporary residents are typically someone who would be on a work permit. And somebody on a work permit, maybe you're coming from the U.S. on a work permit or maybe somewhere else in the world. And you can certainly still buy a home in Canada as long as you still have at least a year left on your work permit and you need a minimum of 10% down and you can get a high ratio insured mortgage. So I think that's really important to kind of note. There also are programs available for maybe borrowers that don't have income to support the mortgage, or maybe they don't have established credit, or, they can't provide any credit references. And typically a regular new to Canada program is 35% down. And that's kind of more of a net worth type program. And typically, they'd put down 35%, but then they would also have, 12 months of mortgage payments in residual savings. So the lenders know that they can pay their, mortgage while they're getting established, while they're working on employment income, or maybe they're going to become self-employed. I don't know. But I think immigration is so important. And, we've been talking about this stat, and I think that I say the Halifax Partnership put it out, and I'll put it on them, and I'm not 100% sure it was them, but there was a survey done, or I guess maybe some stats done, that the population in Halifax was going to grow by 25% over the next 5 years. I can tell you, I definitely saw some stats that there's a lot of new residents that have moved to Nova Scotia and Halifax specifically because of the pandemic. Obviously, we've had a better quality of life here. And I think some people that we're even seeing migration from other areas of the country. Obviously, I live and work in Halifax, and I was born in Nova Scotia. There's no place that I would rather be than here.
35%?
35% down.
Yeah, that's a massive number, right?
It is a massive number. So, that's why we always try to work with new, immigrants, we'll say, around will a program work for a temporary residency or with the 10% down? Or if they are a permanent resident, how can we make it work with maybe the 5% down? So there certainly are options, and everyone can get a mortgage. We even see borrowers who just come right in and, no employment income, no credit, no nothing. But, they can have a bag of cash to make a big down payment, and we can always make something happen. And, depending on what the situation is, sometimes it's more costly, maybe for the short run, but we can always there's always a solution out there.
When it comes to them having cash, do you have to vet where the money came from? That's 100%. A huge part of it, right?
Some lenders require the funds being in Canada for at least 30 days before the closing.
Right.
Some lenders require, the funds to have a 90-day history of, where they've been. Sometimes it's challenging to get a history from funds that are not in Canada. The reason being is certain countries limit the amount of money you can actually take out of the country. But there are a few workarounds, obviously, for getting the money. And sometimes money gets sent from aunt, uncle, friends, and it's really hard to trace the money and really where that money came from. So normally what I tell borrowers is if you need to have the money in the bank for 90 days, or if you need to have the money in the bank for 30 days, depending on like what type of program and what lender you're using, just get the money in the bank. I think, sometimes borrowers are waiting for the best exchange rate, or, they're waiting to like sell an investment, or, they have a property selling in another country. It's always easier when we can prove where your skin in the game is coming from.
Yeah.
And if the money's in a negotiable fund in a Canadian institution, it's always easier. And the one rule of caution that I will say, and I'll say this to, Canadians too, stop moving your money around. I sometimes see borrowers that have 10 bank accounts and they're constantly moving money around from institution to institution to institution. It becomes very challenging to get the history when there's constant money moving around. And anytime that there's large deposits, we have to prove where those funds came from. It's really for anti-money laundering. And the federal government uses mortgage lending really as a way for them to ensure that their income taxes are getting paid, but also we're basically auditing these bank accounts, and the lenders audit it to ensure that the money that's being used for the financial transaction and the financial instrument in terms of getting a mortgage, we know where those funds are coming from.
Why would people move money around?
I don't know. It's just like you move money from one institution to another, and then from a savings account into a checking account, into an investment account, back into the checking account, and then back to another institution. I'm not sure why people move money around. I only have like one bank account in my personal name.
Yeah.
And in my business account, under my business, I have two bank accounts. I don't know why people have so many bank accounts. Even 15 years later, it always perplexes me.
Yeah.
Why so many? And why move the money? I don't know. And it's really hard to unring the bell. But if you're listening to our show, just don't move your money around. Really, really easy. It'll make my job easier. And it seriously will make your job as a borrower much easier when we're asking for that history. And then we're going through those statements with a fine-tooth comb to making sure that, obviously that money is your money.
How do people get a hold of you?
Check us out online. I think the first place to look is on our website at teamclinton.ca/radio. Lots of great information on there. Lots of great contact information, blog posts, and, there's links right to our social posts so you can see all kinds of great information, little snippets of our show, and we'll certainly be back with you next month.
How much fun did you have?
I had so much fun, and I love that it's August, and hopefully we have a great rest of the summer, and I'm really looking forward kind of to September. I always feel September is kind of like a fresh start. So
You got it. Thanks, Clinton.
Thanks for having me.
All right, that's Clinton Wilkins, your mortgage guru, and this is Mortgage 101, your guide to home ownership here in News 95.7. We'll be back next month.